What's up, guys? Welcome to Joy of the Trade. This is my weekly app wrap up. This is where I look back at what I thought would happen this week, what actually happened, what I got right, what I got wrong, and what we learned this week about the market. So on Monday, we started out with a lot of panic. We started out with China Evergrande risk off news just rippling through the markets. We saw the S&P go down over 2%. We saw the Nasdaq down almost 3%. And we just saw stocks just getting pounded. And it was an ugly look. It was a look we haven't seen in the market for a few months, actually. It was a big distribution day. Luckily, 𝗧𝗶𝗺𝗲 came to the rescue in the middle of the week and just does what he does best. Calm the markets down, let everyone know that daddy's here. It's going to be all right. We're buying assets. We can keep buying more. We don't have to stop buying them, but we should stop buying them and all these things. So the market's kind of smoothed out, kind of ride back up. But let me show you where we bounced. And I pointed out this area that we needed to bounce, and we did. So let me show you that chart right now, show you what it looks like. So S&P on Monday did this big test here, and we bounced right where I thought we should, which is that 43, this 100-day moving average, 43.37, up almost 2% from that point. Problem is, we're still like in this saggy descending range here. To break above that range, we need to break back above 4,500. Until we do that, we're still going to be trending lower, and we're going to retest this 100-day moving average, I believe, as soon as next week. And I don't think that all the bad things are out there. I think that this was a knee-jerk group of people that came in to buy the dip. And I think a lot of them are going to be suffering. And I'm going to show you why. Check out this move that happened this week too. This is the move that I've been worrying about. Actually, hold on. Show you the yield. This is the move that I've been worrying about. And I've been saying people are going to get caught so offsides on this move here in the 10-year yields. Rates ripped higher this week, even with it slightly. Well, the Fed said they were going to start tapering. We knew they were going to start tapering. They didn't say when, which was kind of cool for the market. They also said they could do what they want to do and stop tapering if the tapering is a problem. They're very nervous about the stock market, the Fed. That's their whole thing. But the big thing is that half the Fed doesn't want to raise rates next year. So they're split between doing rate hikes next year. Doesn't matter. Bonds sold off, rates went higher. I think we get a shock move in October where we go back above 160, probably 175 range. Going to be good for financials. Going to be terrible for the QQQ. So check this out. If we look at what happened when we had that shock move in the QQQ, we had this big sell-off where we went from 335 all the way down to 299. We had like a little bit, it's not massive sell-off, but we had a bit of a 10% sell-off when rates started to rip. I think the same thing happens, but a bigger sell-off in the Qs this time around. So that's what I'm paying attention to. That's what you all should be looking at. That's what it is, as they say in Miami. So October's coming. We're gonna have a little bit of volatility. You got to learn how to fight with both hands. You got to learn how to play the short side, learn how to play the long side for short periods of time, and have tight stops and short-term trading strategies. That's what's working best right now in this environment. So LFG, guys, have a great weekend. I'll be back on Monday with my report. Sign up for it so you can read what to look forward to next week during the week. Have a great weekend. Get some fresh air. Take care of yourselves. LFG.